I'm Charlotte McLeod with the Investing News Network, and here today with me is Byron King, editor of Rickards Gold Speculator, published by Agora Financial of Baltimore. Thanks so much for joining me.
Good morning. It's good to be with you. Thank you.
Yes, of course, and we're here at the New Orleans Investment Conference. During last night's mining share panel, you chose copper as your favorite metal. What's the case for copper right now?
Well, copper is a global metal. Copper is the electric metal. Copper is the metal of industry. It's really the metal that makes the world. You know, they say water is water is life. Electricity is the quality of life. You know, and so you can't do electricity without copper. Across the world, as people improve their standards of living, they are improving their use of energy, in particular electricity, and that means copper in wiring, copper in appliances, copper in automobiles. Copper is in so many places around the world. So there is a looming deficit of copper as certain mines across the world are throttling back or closing down because they've exhausted their resource, and there's just not enough new production coming on. So we have a supply issue. We have very strong demand for a fabulous product.
Are you also bullish on copper stocks right now? Do you have a favorite, or do you have characteristics you look for?
I like certain copper miners that I write about in our newsletter, the Rickards Gold Speculator. The large, big miners, the Freeport-McMorans and the Rio Tintos of the world, they know what they're doing. They're big and they're good and they're well known and people know about them. There are numerous, intermediate or smaller companies that have very nice projects in the pipeline that are coming up, either in the development stage or almost ready for production, and I see some of those getting bought and getting taken out in the next couple of years. So people who follow the space and invest in it, will get a good feel for it. They'll feel good about it when it happens.
I know you have some gold stocks you like as well. What are your thoughts on gold right now? Do you see a price improvement coming in the near term?
Yes and yes. I like gold, and I do see a price improvement coming. I think that considering all of the factors that should have driven the price of gold down just into the dirt, and for gold to have held its price level, where it is in the last, say the last few months, the last 6 months, the last year and a half. I mean, for gold not to have gone lower than where it is means to me that I think we've pretty much found the floor on the price. And in terms of the future, looking ahead, the world is consuming every year the equivalent of the entire resource base of a company like Newmont Mining. It's 3,200 tons a year of reserves, resources at Newmont. All of that gets pulled out of the ground every year. Newmont itself produces, pick a number, about 5 million ounces, something like that. And so the world needs to find or build or create the equivalent of a new Newmont Mining every year, and it's not happening. And so again, you've got robust demand, you've got constrained supply. Looking forward.
And to fill that supply, should we be looking to the smaller companies for that? Do you see the majors doing anything?
It's an entire ecosystem, really. I mean, it's sort of like if you went to the Great Barrier Reef of Australia, or if you go to, some ecologically diverse area, the Amazon basin or something like that. You're going to see really big critters, the alpha predators, the big great white sharks and the great white reef, all the way down to the small little bugs that grow the coral, and everything in between. That's the gold space as well. You've got the great big miners, the big names, the Barrick Golds and the Newmonts or whatever, and other big gold producers would be like Freeport-McMoran. I mean, a big copper producer where they produce a lot of gold. So you've got the big guys, but then you've got the intermediate players who are also produce a lot of gold. And in a performance sense, the intermediate guys are increasing output faster. They tend to develop their mines faster. They're just less bureaucratic and they're more focused. But then you've also got the smaller end of the juniors, and then you've got the micro-cap kind of junior guys. All of those have to be part of the same ecosystem. They're all part of the food chain, because you never know which tiny little company, a little penny stock, little nickel dime 25-cent stock is going to hit that hole that's going to get itself rolled up into a larger company and eventually bought out by somebody bigger. And so you have to keep your eye on the big guys, but you really have to have a feel and an understanding of the little guys all the way down to the small ones. ones. I mean, God bless those geos and those engineers who are out in the field, literally just taking the trenches and doing the channel samples that are identifying areas that are prospective for gold.
So copper and gold, those are two metals you like. On the flip side, do you have a least favorite metal right now? Are there any that you think you're not interested in, or there's too much hype?
Well, I'm not about to say that I don't like something because it's hard work to do everything. I mean, your smartphone that you have in your pocket or that's sitting on this table right here, out of 92 elements in the periodic chart, depending on who made or what model of phone or iPad or whatever you have, something like 61, 62, 63 of those elements are inside of that device, and so everything is important. A couple things that have sort of, you might say, outrun the fundamentals. I mean, I think lithium is overblown right now. I mean, I don't think the world's going to have a lithium shortage, and I'm not too worried about that. Other metals that some of the other battery metals. I think cobalt, for example, has outpriced the true supply issue, and so I think cobalt had a really good year last year, and it sort of throttled back. I mean, right now the metal of the year is vanadium, V on the periodic chart, because it's used for hardening steel, and everybody has a story about vanadium. Oh, the Chinese are using more vanadium in their steel to build better buildings, and so that that's going to change the whole world supply demand situation. Be careful of those stories. I mean, yes, there's an element of truth to it, but yes, you can also lose a lot of money by just sort of buying into somebody else's story.
Looking at the resource space as a whole, are there any trends you see developing that investors might not be aware of?
Well, a couple of big trends have to do with the quality of just the jurisdictions where people are working. Some places that used to be a little harder to work in are getting easier. Some places that used to be okay to work in are getting harder. Within the U.S., for example, just within different states. I mean, Nevada has always been a great mining jurisdiction. Idaho is an up-and-coming jurisdiction. It's doing very, very well. Arizona's always been mining friendly. At the same time, it's this accident of geography that Nevada's right next to California, and if somebody says, I want to open a mine in Nevada versus I want to open a mine in California, where would you rather be? Not California. Not to say that they don't do mining there too, but they just make it a lot harder. Other thing in Canada, for example, and don't take this wrong, but I mean, First Nation issues are a big issue, and any mining company that wants to work there must make an agreement, must work it out with the First Nations, to the extent that the miners don't know how to do that, or to the extent that the First Nations somehow or another don't want to play ball. I mean, that's a problem in terms of development. As you go around other parts of the world, you see higher and higher levels of jurisdictional risk. A lot of money went into the Congo. A lot of money is never going to come back out of it. A lot of you see areas of South America that are starting to get better. Ecuador has become much better in the last, say, 10 years. Venezuela has just fallen off a cliff in terms of, the ability to get anything done there. Venezuela is a very large gold province, and people don't think of it. People think of Venezuela as an oil producer, but I mean, what a terrible thing, Venezuela. It's a country full of gold, full of oil, lots of fertile soil, plenty of fresh water, right next to an ocean full of fish, and people are starving. It's just it's the difference between good politics and bad politics.
There are 2 months left in 2018. As we wrap up, do you have any final words of advice for investors?
Yes, if you are an investor or if you're getting into it, and you have to be very careful but very opportunistic in the last 2 months here, because here we are. It's right now November. It's the 3rd of November as you and I are having our talk. We are going into what's called tax loss selling season, which is an annual event at the end of every year where people who've made money on some stocks are selling their losers so that they can balance it out for tax losses. So this has been a really good year for a whole lot of people on a whole lot of things. In technology, the Facebooks of the world, or the Amazons, or the Apples. Not to mention, people may have made some money on cryptos, may have made some money in marijuana, may have made some money doing whatever. But now they have to balance it out. So what are they going to do? They're going to look at their mining shares. They're going to say, oh, gee, I'm down on this, down on that. They're going to sell a bunch of those guys off too. What happens in November until about the first week or so of December, the mining sector doesn't just get cheap, it gets like dirt cheap, super duper on sale. So this is the time, if you have some cash laying around, this is the time to be looking at these, at quality mining shares, the juniors, the micros, even the intermediates. Look at the ones you like, and be ready to scoop in mid to late November, early December, towards the end of December, that you start to see the pickup. And then in January, you have this January effect, this lifting effect. And just that alone might give you a 10-15% gain within about 2-3 months between the middle of November and the middle of January.
Okay, well, that's great. That's all from me. Thanks so much for joining me today.
Thank you. It's a pleasure.
Great. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Byron King.